December 18th, and I took a trade today on futures. I also took a trade on yesterday, but um, I wasn't able to record it, so I was going to do a trade recap on that now and then trade recap on today's trade. So yesterday's trade, I think, was a good trade. If anyone was looking at the markets, you see how we pretty much melted. I want to say that's almost 600 handles down. That's kind of wild. So naturally today that's not gonna happen. I don't see like there's always a balance, right? In everything and in life and spirit and trading, there's always a balance. So if the trade did this crazy move like this, it's not gonna do it again. It's gonna maybe do half of this handle size, but not the same. Either way, yesterday's trade was good. It took out London. New York took out London highs. So I expected a bearish, even though I know overall we needed to be bullish. And we did close above the previous day candle as bullish. But in this move, in this morning, in this macros, in this time of trading, when the volume is highest and market is open for the first time and the volume is there and everything is ready to go, we were bearish and we were hella bearish. I put these indicators that put previous day highs and previous day lows and this fair value gap. It's I draw it myself, but when I figured out that they actually have fair value gaps, it's nice to kind of use. But I still draw my own because it doesn't get it perfectly. It kind of and if the fair value gap gets inversed or invalidated or whatever, it disappears, at least the ones that I use. So here's New York kind of opening up somewhere over here ish. And I noticed that my position got presented itself, or my strategy presented itself kind of early in the pre-market. One, I'm looking at these candles that have longer wicks and small bodies. So those are an indication that I'm going to keep going down. Then I get this fair value gap here that gets hit into before market opens, like 920 and 925. Um, then this candle forms right after that, this kind of bigger gray one. It's terrible. I'm using my phone because I'm driving, but that candle forms, and I just go ahead and take the trade. Why? I took the trade because I knew I was going to be bearish. Market had already reversed down to the downside or bearish side. I had a fair value gap here that was being respected. I had a fair value gap here that had already been respected on the 1 hour. So this was a bigger fair value gap that had been respected. Um, I had a break of structure or a change in direction. So instead of me going up, which we had been, up this whole time, Lord, up this whole time, I saw this reversal come back. So I had like a few confirmations that let me feel like, yeah, we're gonna go bearish. Took this trade here. I was literally in it for this candle and got out. Because of the momentum of the candle, it really, really dropped me down. And so I came out of that positive. I guess I shouldn't say drop me down because it sounds like I lost, but um, yeah, went in my favor, kept making more fair value gaps, still moved beautifully, but I came out after that one because I got busy. I knew I knew I wasn't going to be able to really pay attention to the trade. It's holiday period. It's like my only day off. It's like I only have 2 days off before I go back on the road for work. So I'm busy cooking, cleaning, putting up the tree. And so I was like, yeah, I don't have the capacity to pay attention to this trade. So I got out. Protect your capital always. And I got out with 2,100 per account, and I copy trade. So I've got 9 accounts, so 2,100 times 9. Of that, how much real money is mine is 3,300 that I made yesterday. That goes into my live account, which totals, I guess I'm going to show all of that here in a second. So anyways, market just kept doing what it does beautifully. Um, it's important to always have markers. Like, had I stayed in this trade, as long as we kept moving down, even in this consolidation, as long as we kept moving downward, we hadn't hit any. Um, oh, I'm sorry. We had hit some key levels here. This might be like some relatively high key level here. Um, this key level here. As long as we didn't have any key levels, I would have kept going. But it depends. It gets kind of tricky. And a key level is good to get out, or it's good to partially remove your number of contracts that you're in. I tend to right now just do two NQ or two NQ or two ES. One top step limits you to not doing more than that, depending on which contracts you have or what account types you have. Um, but I guess even if I didn't have that, I'd probably stick to 2 to 3 contracts each time I traded. So I would downsize, like, hey, I've hit this key level here and it's a relatively equal. There's a concern that I might reverse back or have been one crazy drawdown before I continue downward. Let me go from 2 to 1. Sometimes it doesn't make any sense to me when I do that. So, and again, during the day, I'm tired or I'm like I had just gotten off work the night before, or and I'm tired for the day, or I have other stuff that I need to do. So to keep watching the charts over and over and over again would drive me insane, and then would make things just I'd feel anxious. And then what's the point of trading if I'm constantly anxious? I don't want that. So in a normal sense, I would have probably downsized here and then maybe downsized here and then been like had FOMO and then wanted to go back in, but then I would have just let it go. Um, my point is that it's good to have markers, like to mark your fair value gaps. These are all off now because once the market shows that it's taken out those prices, I don't keep it on because they're invalid. Now you look for key levels here that you can target as both your take profit, well, really as your take profit. So yeah, 2100 yesterday, Wednesday, on all 9 accounts. I traded NASDAQ 2 contracts on that. All right. So then coming into today, I didn't really look at the charts overnight because I've been off for these yesterday and today. So um, I've not been working nights, so I've not felt like I needed to follow what the chart does. But just looking at the chart in general, patterns are important. I mean, it's just like, this is a swing. If you see this large movement, it's like 600 handles. You see some consolidation down here, maybe some support. You have like three not relatively equal, but some significant like pushes here for green. Like we're not trying to go any further than this gray line here. This gray line is a bearish fair value gap. We're not trying to get any lower than that. And then you see this move steadily through Asian market, through London market. We're moving kind of bullish. So it feels like you're going to be bullish. Also, when you look on the daily candle, I saw that yesterday's close is lower. 2 days ago close is lower than yesterday's close, and today's open is higher than yesterday. So we're just constantly pushing up. Like we're going to be bullish. Cool. So, and then you see this massive candle, which I don't even know if news took place because I didn't even look at news today. I didn't even pay attention to be, yeah. So, but I saw this large candle here. If you see it on the hourly, it was like a large candle here. And I was like, interesting. That happened going into pre-market, Londonish pre-market. So I'm like, okay, that shows a lot of momentum. Like we want to be greenish at least. I'm seeing a few things that are telling me we want to be greenish. We've hit this what looks like support level over here. We have all this fair, this gap or imbalance really over here that needs to be recalibrated or you know filled on this side. I don't know terminology. I just say what I need to say. And so I'm bullish for the day. Like here we go. Market opens up and I look to see did it take out London high or what. And at this point it did take out London high. So we reversed. I said, okay, well, I'm going to prepare for bearish. The important thing for me when it comes to trading is to just go with the flow. Even if my bias is bullish, like even if I've got 1,000 confluences that say bullish for the moment, I need to be aware that the market does whatever it needs to do. If I try to force the market to do what I want to do, I lose, right? Because my perspective is always just be grateful that you have the opportunity to be here and ride the wave. Just go with the flow. Um, I don't know if anybody has those kind of issues in their personal life or in their work life where you have to control everything, you control the narrative and things like that. Trading will test all those things and make you realize you really are subject to whatever it gives, but you have to be smart and patient to think and predict where it wants to go. That's the whole point. You got to just figure out, based on what it's doing, where does it really want to go? It don't matter what the charts, what previous analytical and rah 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 says. What does it actually want to do? That's your goal. That's your whole goal every day. Where does the market really want to go? Once I figure out where it wants to go, then I'm going to sit in this cart and just say cool and go with it. That's it. So I thought we are going to go bearish, and you can't tell because of the indicators that I use for a fair value gap, but there were fair value gaps here, and then it went away because it got invalidated, and then we went kind of back up, invalidated. So I'm like, okay, we're gonna go bullish. Then we went back down. I said, okay, look, I'm cool with whatever direction you want to go, but I definitely have to give myself a few confluences to figure out, or a few confirmations, whatever, to figure out what direction we're really gonna go. So the reason why I took this trade, and I did this trade in about like 6 minutes. I didn't stay long in it, but I definitely waited for it to hit my take profit, was because I had confirmation here. I had what I drew as an equilibrium, which I can explain at another time, but this gray box here, I had price dip into the discounted space and then shoot back up, right? Because you never just want to buy something at full face value. If you can get it for a cheaper rate, you would. And if I know that I'm going upwards, which is bullish, which is more and more money, I'm going to find a way to get a discount first to make sense. So when the market kind of dips into this equilibrium space, or into this discounted space where you can collect something cheap, like cheaper money or whatever, and then come out, that's a confirmation for me that we're going to keep going bullish, and that's what happened. Then, of course, my fair value gaps were being respected each way. So I entered it on this candle. It's hard to see with this pointer. On this candle, took it up to this candle. It hit this gray mark, and I got out. That was my take profit mark. That's a fair value gap on the hourly, so that's a significant space. Was I expecting it to go through? I honestly don't know. Right now, the time is 10:50 Eastern time, so I know that things will start to kind of slow down. Candles will start to get a little shorter. You'll start to have more wicks. It'll take longer for you to get wherever it is that you need to get to, as far as price and TPs getting hit, and it's just a bit of a drag or a drip. So I just I take all my profits out at here, and I was out. So my earnings, or whatever you call it, up here is 1331. I did reset an account that I had lost like months ago or something. Because Top Step, whenever it malfunctions, which boy did it malfunction yesterday, and I had a whole letter written. Like, I had earnings, guys. Don't tell me you're resetting things. But Top Step is really great about when their Project X or their platform, when it stops working or it has some sort of issue, if you were in some sort of trade or whatever the discrepancy could be due to that malfunction, they will reimburse either resetting your account or something. They do something great. Anyways, I've had these reset credits from like previous accounts that I never used, and thankfully they have not expired, so I just keep adding them. So right now I have 10 accounts, right? And then yesterday I passed a funded account. So I've had these 3 that I passed last week. Then yesterday I passed this one. So, sorry, I didn't activate an old account. What I did was I activated an Express account. So I passed this account. Now, it's funded, and my earnings are what I keep, essentially. So I added it to the family here. So now we have 10. So 10 times this is what I have. But what I'm keeping for myself, you would say, I think you say 4. Yeah, 4 times this is what I have, right? So that's 5K or so. That's okay. And that's in 6 or 7 minutes. So that's pretty good. Emotionally, I'm okay. If you asked me this question like 2 months ago, 3 months ago, emotionally, how do you feel? Like, what's going through your head? It would feel like I was a whole millionaire. Like, I'd be jumping around in my brain. I'd be doing cartwheels. I'm not. Like psychologically, it's not about the money. It's all about the strategy. It's not about the decimal point and all those things. It's about entering in, figuring out what the market wants to do, getting in, getting out. It's also not about being greedy. I was telling my sister the other day that I have learned less is more. Less is definitely more because you can always come back tomorrow and add. You can always come back tomorrow and add. The concept of like, I think about if you're walking down the street and somebody drops $1 million of cash on the ground. Now that belongs to somebody, but the person dropped it, and like they knew they dropped it, and so then they see you there, and they know you're gonna take it because it's $1 million of cash. Like they're not gonna be able to just quickly swoop it up, and they're not gonna tell people, hey, they can't tell enough people, hey, don't touch it, that's my money, because it's loose cash. Like of course people are gonna grab it. Like who's not gonna grab loose cash? But what a smart person does is they just take some. I'm just saying, you just take some. You don't take all of the $1 million on the ground. You take like 10%, you take 5%, and you go because it's not your money. So you cannot have the mindset to say, I'm going to take all of this. Why? You didn't drop it, you didn't make it, you didn't earn it, you weren't going to deposit it. So why would you think all of it would be yours? Just take a small amount. This is why fraudsters get in trouble. They get an opportunity to steal money from people, and instead of just taking like 10%, they go for the whole cake and the bakery and the chefs and the whatever is in there. Like just take a piece. And so in my mind, I'm always like, take a piece because this is not yours. I am not S&P. I am not Nas. I'm not the one that created the market. I'm not the one. I didn't go to finance school. I'm not, you know what I mean? And I'm not hungry. Praise God. I'm not thirsty. I'm okay. So I'm trying to find a way to make consistent income in this to where I can tomorrow, not have to work all the time, working nights, traveling, not being with my family, kids, and things like that. Like I'm I'm steadily working towards that, and I know less is more because I'm building. I'm not trying to become a millionaire overnight. That's not realistic. So if the market gives me an opportunity to make $1 million today, I'm gonna make like 10K. I'm gonna make 100K. I'm gonna be cool with that. I'm gonna learn to be content with that. I'm gonna remind myself that I didn't build this market, so it doesn't owe me anything. And I'm gonna remind myself also that tomorrow is another day. If I have a working strategy, and I know not to be greedy, I know tomorrow is another day, and I can take the same strategy and multiply it 1,000 times, 1,000 times, and that's what makes this space right here amazing. Also, I've always wanted to keep working. I like working. I'm not the person who feels like, oh, I don't want to work anymore. Let me just chill and coast. I don't even know what to do with free time. When I have free time, I still find ways to put other things in. So realistically, this is the best job, career, business, whatever you want to label it as, because you can do this till you retire. Imagine I wanted to become like a CRNA and sit at the head of some patients who are getting their bodies cut open while I'm on my cell phone, so I hear, and make a cool 300,000 bands every year and be fine, which is okay. And it is because it's retirable. I mean, you're not heavy lifting. You're not having to work nights. You're doing all the things you like, working, making money, maybe doing procedures, maybe only working 4 to 6 hours a day, cutting it short. That's all great. And it's retirable. That's what I really wanted. But look at how God blessed me to understand trading. I can do this from home. I can do this from Hawaii. I was doing this while with my son at speech therapy. Like, hello. This is insane. So, today's Thursday. I've done this. I told myself I wasn't going to trade, but opportunity presented itself. I saw my number of confirmations. I looked at my strategy. My mentality was calm. I did everything I know I'm supposed to do. I shouldn't have done it while driving, that's for sure, but I did what I know to do. I stuck to my plan. I'm making it routine. I'm trading within my window. This is good. Tomorrow is Friday. I don't know if I'll trade. One, because it's Friday. Two, is it Friday? Yeah, tomorrow's Friday. One, because it's Friday. Two, because this is still holiday period. December is still the worst month to trade because it's volumes are down. People have not gotten their bonuses. People are on holiday. Like things are not really moving. But yesterday was insane, and that move yesterday was like, no, there's still a way to capitalize on that. At least for yesterday and today. I don't know about Friday for me personally, but I will still look at the charts always. Every morning I feel like I look at the charts, but I may not find anything to enter into. We did have news here 8:30, and I can't. Oh, maybe I can. Oh, cool. So we did have news, and I'm looking. U.S. at CPI news. Aha. So one thing I don't see people talk about it enough, or I'm just maybe in my own world. Forex Factory, everybody talks about it. It's a great resource to figure out if there's news. So, if you want to be in the markets or if things shift while you're looking at the charts, you understand, you know, that something's going on. And people always express red folder, red folder, red folder. But people don't tell you what it is, like what's the red folder mean and who and why should I care? They don't. People. I've not found a huge explanation. I've only been told if you see CPIs, non-farm, FOMC, specifically with Powell, the name Powell for FOMC, like get out, don't trade, whatever. So doing some research just for your own edification or whatever. If you see CPI and you see 3.1 or you see some percent at forecast and you see actual, if your actual is less than your forecast, expect a bullish market. That's important. See, I didn't even look at the news today, but I'm seeing this now, and then I saw that we were kind of bullish, so that makes sense to me. Is it going to change your entire perspective? No, but I think that information, knowledge and information is super helpful. I think that really does make a difference sometimes in the way that you're thinking going into it, but your strategy should still be the same. Your confirmation should still be the same. Your indicator should still be the same. Your volume and how much you are risking and all those things should still be the same. But sometimes in the back of your head, if this is something that like for me in the back of my head, this is something I'm interested in learning. I really want to delve more into finance and understanding it more. That was an important piece of information that I learned, and yeah, I thought that was important. If I could always share a PDF of this, like a cheat sheet, if anybody's interested, I guess let me know. But yeah, that's all I have for today, Thursday. Let's